Good morning. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is April the 1st, 2009. Today's brief topic is the rally hits a speed bump. Before we go on, I have to go through the disclaimer. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Good morning, and of all days, April Fool's Day, we have something to say. Maybe it's not me bringing the news, but the market, and that is that there's a speed bump coming along the way here in this fantastic rally that the market's had for the last month or so. I'm looking at this more as a speed bump than as the end of the rally, and let me tell you what I see. So let's move on, get on with the program, and show you the chart that has the explanation on it. What I'd like to do is look at the Standard & Poor's Index, and we have a potential head and shoulders pattern in the making. We saw that the rally ended last Thursday. We had a decline beginning on Friday and really took off to the downside on Monday. Yesterday we saw a brief retracement rally that appears finished now, and what we have is what's left is how far down should this thing go. What caught my eye is a potential head and shoulders pattern. What I drew is the neckline across the bottom of the lows that we've seen in the Standard & Poor's Index over the last 2 weeks. What we have here is a potential break at 780 on the Standard & Poor's. Once we go below 780, the minimum target for a potential head and shoulders pattern is 727. Now, I'm not sure that we're going to get there, so I have to make that clear that this is conditional on the fact that the Standard & Poor's breaks down below 780. But the point is that we've had a long rally by any standard, and a very good one at that, and it's due for a rest, or, as I was saying earlier, possibly a speed bump in the rally. This could be quite a bump if the S&P goes below 780. It could decline all the way down to 727. Now, the opportunity or the potential for that happening, the probability is about 67%. Now, that's not the highest of all probabilities, but that is a very good one nonetheless. So just be aware that we have some risk involved to the upside right now. I want to be careful if you have long positions. But once this decline is done, I'm looking at this as an ABC pattern, which means once the minimum target to the downside is reached, that very possibly soon after that the rally may continue on into the month of April. So having said that, I would like to say that this has been quite a strong rally. In fact, it's the strongest by any records that we've seen since 1938. And you have to remember 1938 was still in the middle of the bear market. So you have to understand that this is a bear market rally, that not only are the rallies strong, but also the retracements can be very, very strong too. 727 just happens to be very close to the 68.2% retracement, which is pretty standard. It's pretty common in any kind of situation, whether it's a bear market or a bull market. So given that, I hope you all do the right thing. Be careful, especially the next few days, and I think Friday may see a very, very strong unemployment report. We don't know that for sure, but when we hit the target, if we hit the target, remember there's still a 33% chance that it might not, but once that target is reached or we've come near to it, the pattern is probably going to be over, and we're ready to resume the rally that we've seen during the month of March. Fundamentally, I think that there's one thing that's going to keep this rally going, at least for the next couple of weeks, and that's IRA season. I was shocked to see how many people are making IRA contributions this year, and apparently it could be that this bull market rally is encouraging them to do so. Unfortunately, once we get beyond April the 15th, I'm not so sure that we have any fundamental reason why there's more money going into the market. So I hope you have a great rally after this little bump in the road, and we'll get back to you with more details as this thing goes on. So in the meantime, happy trading and do the right thing. Thank you.